Howdy, everybody. Welcome to Liberty Call. Today is Monday, November 18th, 2024. Hope you're having a fantastical day out there in the interwebs. It's a beautiful day here in Colorado. It's about temperature topped out around 50 degrees. It is clear, a few clouds. We're going to get some snow tomorrow, unfortunately, but maybe just a smidge. So nothing like we had the last week or two. So anyways, hope you had a great weekend. Texans football's on tonight, which is going to be exciting. And let's see what else is going on in the world. Oh, the Tyson fight was Friday night. It's kind of a lot of hype, not a whole lot of punching thrown, but I got to give it to Mike. When he was coming out, if I felt like I was like 14, 15 years old again, watching him come out and just pummel people. And he looks great for 58 years old. Physically, he looks amazing. So, I'm 50. I wish I was in that sort of shape. So, I try. But, he's obviously got a little better genetics than I do. So, anyways, all right. Well, we didn't come here to talk about, boxing and stuff like that. You came here to find out what happened in the markets today, right? Right? Exactly. All right. Well, before we get started, if you could do me a favor, give me some thumbs up, a like, share, subscribe, a follow, and press the notification bell. All right. Well, now we can get into the markets. All right. Dow Jones was down 0.13% today, 55 points. Closed at 43,389. The S&P 500 up 0.39%, 23 points. Closed at 58.93. NASDAQ up 0.6%, 112 points. Closed at 18,792. The VIX was down 3.47% today. It's at 1558. Canada up 0.35. Brazil flat, down 0.02. And Mexico down 0.17. Over in Germany, or over in Europe, Germany was down 0.11%. The UK up 0.57%. France up 0.12%. Netherlands up a third. Same with Spain. Italy down 1.27%. Switzerland up 0.04%. And Portugal down 0.23%. It's one of the few times that Portugal and Spain are opposites, at least that I've noticed here in recent months. Let's see here. In Russia, the MOEX was down 0.59%, the RTSI down 0.54%, and the Asian markets, the Nikkei was down 1.05%, Australia up 0.18%, New Zealand flat at 0%. In China, the Shanghai was down 0.21%, the Shenzhen component down 1.91%. China A50 up 0.36, DJ Shanghai down 0.52, Hang Seng up 0.77, and the Taiwan weighted down 0.86. All right, so that is the markets for today. Let's jump over to the weekly economic update and see what's happening there. Stocks fell last week as the post-election rally lost momentum amid an inflation uptick and cautious comments from Fed officials. The S&P 500 fell 2.08%. NASDAQ declined 3.15%. Dow Jones Industrial Average lost 1.24%. And overseas markets dropped 2.38%. The rally fizzles. Stocks began the week with modest gains as all three major indexes hit record highs. On Tuesday, stocks took a breather with monthly inflation pending. News that the consumer price index ticked up slightly in October injected some uncertainty into the markets. The producer price index released the following day showed wholesale inflation ticked up last month. While both the CPI and PPI aligned with expectations, investors hoped for better news. Comments from Fed Chair Powell that the Fed was not, quote, in a hurry to cut rates were a bit unexpected, which put stocks under more pressure. Stocks dropped again on Friday as strong October retail sales seemed to reinforce Powell's comments about Fed rate adjustments. News that Boston Fed President Susan Collins expressed doubts about what the Fed might do in December, putting further pressure on stocks. All right. A tug of war. The inflation data that came in last week, retail and wholesale, show that the path to the Fed's stated goal of 2% inflation may prove bumpy. For the past couple of years, inflation has been the focus of the Fed's efforts to manage rising prices by tightening the money supply. Really? They grew it this much and then they tightened it this much. So, they haven't really done a whole lot. Ironically, strong retail sales numbers, while a sign of a strong economy, send a mixed message to investors. Confident in consumers tend to spend money, which may take some pressure off the Fed as it looks to manage economic activity. Economic data this week. Monday, we had Fed official Austin Foolsby, it's Goolsby, but I think he's a fool. He's speaking today, and the housing market index. Tuesday, housing starts and permits. Wednesday, Treasury buyback announcement. Thursday, existing home sales, weekly jobless claims, and Fed official Beth Hammack speaks. And Friday is consumer sentiment. Handful of companies reporting earnings this week. Tuesday is Walmart and Lowe's and Medtronic. Wednesday is NVIDIA, TJX, Palo Alto Networks, and Target. Thursday is Intuit and John Deere. All right, so that is the weekly update. Hopefully I've filled you up with all the financial knowledge you need to get you through another week of calamity out there. All right, let's get to the market recap. S&P 500 closes higher as Tesla leads the charge. All right, the S&P 500 closed higher Monday, buoyed by gains in big tech and Tesla as investors prepared for key NVIDIA earnings and comments from Federal Reserve officials. The market rebounded from last week's retreat, which followed Fed Chair Jerome Powell's cautious stance on further rate cuts. Tesla surged over 5% on reports that the Trump administration plans to prioritize a federal framework for self-driving vehicles, boosting optimism in the sector. Major tech stocks, including Apple and Alphabet, also advanced more than 1%, while Roku climbed 7% after Baird upgraded its stock to outperform, citing buying opportunities after a recent pullback. Spirit Airlines filed for bankruptcy protection after years of financial struggles. The carrier has reached a deal with bondholders and expects to exit bankruptcy in the first quarter of next year. Meanwhile, NVIDIA slipped 1% following reports of overheating issues with its new Blackwell AI chips. This comes ahead of its highly anticipated third quarter earnings on Wednesday, which will serve as a key barometer for the AI trade and broader tech sentiment. With 93% of S&P 500 companies having reported earnings, 75% have exceeded earnings per share expectations, and 61% have surpassed revenue forecasts, according to FactSet. Upcoming results from Walmart and Lowe's will provide further insights into consumer spending strength. The U.S. economic calendar highlights manufacturing and services PMI data due Friday. Meanwhile, the housing market showed resilience with the November National Association of Home Builders Index rising to 46. Investors are also watching Fed officials' remarks for signals on monetary policy and Trump's proposed trade tariffs. All right. So that's the market news for today. Let's dive into the Monday morning outlook from Mr. Brian Westbury at First Trust. This week's article is titled, "Don't Forget the Lags." So let's see what he has to say. The 2024 election of Donald Trump draws parallels to Ronald Reagan's 1980 victory, with both campaigns emphasizing tax cuts, deregulation, and smaller government while opposing big government spending and government-heavy policies. Well, those of us who were alive in 1980, I was 6 years old, going on 7, when the election occurred. And it's the first election I remember. I don't remember 1976. I was only 2, but I definitely remember Carter being president. And I vividly remember the 80 election. I remember sitting on the floor in the living room. I can still see the old big console TV in front of me watching the election results. And Mr. Reagan did promise smaller government and less taxes and all that good sort of stuff, but he did build up the military, which did create a lot of spending. So, yeah, I like Ronnie, but he had his flaws. Where were we? The S&P 500 rallied leading up to immediately after both elections, reflecting market approval for pro-business and policies. However, historical lessons from Reagan's presidency highlight the complexities and delays of implementing such reforms. In 1980, optimism was tempered by a recession as Fed Chair Paul Volcker battled inflation with tight monetary policy. In contrast, today's Federal Reserve is cutting rates, which could ease short-term economic pressures. Still, the current price-to-earnings ratio of 27 suggests much of the market optimism is already priced in, unlike PE ratios of 8.6 in 1980. And if we could stop here, I personally like PE ratios under 15. Typically when, if I'm looking for stocks to out there to buy, typically, I like dividend paying stocks. Typically, those are ones I really, if I'm going to center in on actual, not just an ETF or something like that, I'll look at dividend payers with an earnings per share under 15. Typically, those are your best priced securities. But again, this is not financial advice, blah, 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 but anyways, so if currently the S&P 500 has a PE ratio of 27, that is a little more. All right. Trump's economic plan, including modest tax cuts and regulatory reductions via proposed Department of Government Efficiency, DOGE, could boost productivity and private sector growth. However, the U.S. must also tackle excessive government spending, which has risen from 19.1% of GDP in 2007 to 23.4% today. This ball and chain effect has stifled economic growth, reducing annual real GDP growth from 3% pre-2008 to just 2% since. Cutting government size and spending could initially slow job growth, especially as nearly half of recent job creation has been government-dominated sectors like healthcare. However, long-term reforms could revitalize the economy and improve living standards. The transition may be painful, akin to overcoming an addiction to short-term fiscal fixes, but the potential for enduring prosperity remains significant. While immediate success is unlikely, the U.S. economy could emerge stronger over time, echoing the Reagan-era economic revival, which the 90s were pretty awesome. I mean, granted, I thought Clinton was a piece of crap, and just because he was a philanderer and getting special favors in the Oval Office, I guess I'll keep it as clean as I can. So, all right, well, that's everything that I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. I'd be happy, or go to my website and book a meeting. I'd be happy to help get you back on track, or at least take you to the depot and get you started. And as you can see, my boy back there, Jake, he wants to go play. It's playtime. I had to go into town and do groceries and shopping and stuff a little while ago, so he hasn't had any ball time. Can you see the anger on his face? I wish I could zoom in, but I can't. So he's like, Dad, I've worked all day. It's time to go play. So, all right. Well, I hope everyone out there has a wonderful evening, and I'll talk to all y'all again next time. Adios.